Have you ever found yourself wishing for a shortcut? A way to cut through the mountain of information on major companies and quickly grasp what truly matters without feeling completely overwhelmed? Well, consider this your express lane. Today, we're embarking on a deep dive into Alphabet Inc., focusing specifically on their Class C shares, ticker symbol GOOG. Our mission is to sift through the most recent financial reports, analyst insights, and company announcements. We're going to extract those crucial nuggets of knowledge for you, giving you a sharp, clear understanding of Alphabet's current standing, its strategic direction, and maybe some of the challenges that might be brewing on the horizon. This isn't just about reading numbers. It's about understanding the compelling story behind them.
Right. And to really get at that story, we've pulled together a stack of insights. Comprehensive stock analysis, their latest Q2 2025 earnings review, direct highlights from the earnings call transcript itself, and, a variety of market commentary. It's all about connecting those dots to give you a complete, unbiased picture.
All right, let's unpack this then. Whenever we look at a company, we usually start with the fundamentals. So what's the financial snapshot for Alphabet right now based on our sources?
Okay, so we're looking at a last closing price of $193.29 USD. Now, when our analysts dive in, their fair value estimate for Alphabet stands at $180.79, with the price target maybe looking a bit further out of $200.81.
Okay.
And just to put that in context, the stock's seen a 52-week range of $142.66 to $208.70. So it's just quite a journey over the last year.
That's a pretty significant range, yeah. And when we talk about Alphabet, we're not just talking about a big company. We're talking about an absolute behemoth.
Oh, absolutely. The sheer scale is staggering. Alphabet boasts a market capitalization of $2.33 trillion.
Trillion, wow.
Yeah, trillion. With 12.2 billion diluted shares outstanding, which, means the total number of shares that would be in circulation if all convertible securities like stock options were exercised. These aren't just large figures. They really illustrate Alphabet's immense global footprint and influence.
And speaking of influence, let's talk about their most recent performance, the second quarter of 2025. What was the headline story from those earnings?
Well, Q2 truly was a standout quarter for Alphabet. They significantly exceeded market expectations across the board. Consolidated revenues climbed a robust 14% year over year, hitting an impressive $96.4 billion.
That's a huge surge in revenue. 14% year over year on that base is massive. How did that translate to the bottom line?
Well, the earnings per share, or EPS, saw an even more impressive 22% surge to $2.31.
22%, okay.
Yeah, and operating income, which really shows how well their core business is performing before taxes and interest. It also demonstrated strong operational leverage, meaning their profits grew faster than their revenue, due to efficient cost management. That saw a healthy 14% increase to $31.3 billion. These results really underscore remarkable momentum, suggesting their strategic bets are truly beginning to pay off.
So if we're looking at what powered that strong quarter, what were the primary engines driving this growth? I mean, where is Alphabet truly shining right now?
Yeah, if we connect this to the bigger picture, it's clear their two primary growth engines continue to be Google Services and Google Cloud. And both are benefiting immensely from the company's deep integration and, frankly, strategic investments in artificial intelligence.
Right. Google Services, which, let's face it, most of us interact with literally every day, saw revenue jump 12% to $82.5 billion. I know that was fueled by search and YouTube advertising. But I heard the subscription growth was particularly interesting this time around.
It really was. What's fascinating here is the 20% jump in subscriptions. This primarily reflects growth in YouTube offerings and Google One. But the real story for Google Services isn't just about traditional ads anymore. AI overviews and AI mode in search are now driving increased user engagement, reaching billions of monthly users and boosting search queries by 10%.
10% boost just from those AI features.
Yeah, this isn't just a tweak. It fundamentally reshapes how people interact with search, It could potentially drive a whole new era of engagement and even redefine what search means, making it less about finding links and maybe more about getting direct answers.
Interesting. And then there's Google Cloud, which just seems to be on a consistent, meteoric rise lately.
Indeed, Google Cloud continues to impress, a substantial 32% revenue increase to $13.6 billion.
32%, okay.
And its operating margin significantly expanded from 11.3% to 20.7%. That indicates improved profitability and efficiency. But the most crucial detail here, I think, for future growth is that the segment's backlog has swelled to an impressive $106 billion.
Oh, backlog of $106 billion.
Exactly. This This reflects extremely strong demand for its core products, its AI infrastructure, and those generative AI solutions, including multiple new billion-dollar-plus deals signed just in the first half of 2025 alone. That's a massive forward indicator of sustained demand.
Okay, so when we talk about this kind of performance, it really makes me think about competitive advantage. We often hear about Alphabet's wide economic moat. How does AI specifically play into building and defending that moat?
Yeah, that's a really important question about their long-term sustainability and, why they're so hard to catch. Alphabet possesses a wide economic moat, and it's primarily driven by what they call their differentiated full-stack AI approach. Now, this isn't just a buzzword, it encompasses several layers. First, they have world-class research and models. They're continuously expanding and improving the Gemini family of models like 2.5, Flash, Deepting, offering, industry-leading performance.
And that cutting-edge research isn't just sitting in a lab, right? It translates into tangible advantages for them.
Precisely. They back it up with advanced infrastructure. They operate a leading global network of AI-optimized data centers and offer the industry's widest range of TPUs and GPUs. I mean, this is why nearly all generative AI unicorns and leading AI research labs choose Google Cloud and TPUs for their foundational work.
Makes
Then there's deep product integration, bringing AI to a vast user base through deeply integrated products like Search, Workspace, Chrome, Android. They're processing over 980 trillion monthly tokens across their surfaces. That's just a staggering amount of data, highlighting their digital reach.
And speaking of reach, YouTube is still an absolute powerhouse in that ecosystem, isn't it?
Oh, it truly is. YouTube maintains its dominance. It's held the #1 US streaming watch time for over 2 years now. They're scaling shorts to over 200 billion daily views and diversifying its subscription options. All of this combines to create immense user stickiness and attracts significant enterprise demand. So in essence, Alphabet isn't just leading in one AI area, they're building like a fortress across the entire AI stack, making it incredibly difficult for competitors to replicate their advantage.
Okay, looking forward then. Alphabet is clearly investing heavily in the future, making some pretty bold bets. Let's talk about their aggressive capital expenditure, or CapEx. That number caught my eye.
Yeah, their commitment to leading the AI frontier is crystal clear in their substantially increased CapEx outlook. For the full year 2025, the company has increased its CapEx outlook to approximately $85 billion. That's up from an earlier estimate of $75 billion.
10 billion more, wow.
And they expect a further increase in 2026. This aggressive investment is primarily directed towards technical infrastructure servers, data centers, explicitly to meet burgeoning AI and cloud demand. It's a move that signals massive confidence, but also substantial upfront costs. They're literally building the future of AI infrastructure right now.
So they're pouring billions into that infrastructure.
Mm.
What does that mean for how we'll interact with technology in the near future? They're talking about these agentic AI experiences. What does that really mean?
Well, the company has a strong long-term belief that AI will fundamentally transform how people interact with information. They anticipate that agentic AI experiences, where AI can act more autonomously on behalf of users, will become more broadly used by 2026.
So less asking questions, more delegating tasks.
Exactly. Think of it less like asking a question and more like delegating a task. Maybe AI planning your entire trip, managing your emails, or even booking appointments, all without constant human prompts. This unlocks significant new opportunities, and we're seeing continuous innovation alongside this. From the widespread adoption of the Gemini app now with more than 450 million monthly active users, to advancements in video generation with VO3 generating over 70 million videos. Even Waymo, their autonomous driving service, continues to expand, launching in Atlanta and more than doubling its Austin service territory. It's all moving forward.
And beyond just organic growth and AI development, they've also made some strategic moves in terms of acquisitions, right? Like the acquisition of Wiz.
Yes, exactly. They announced the agreement to acquire Wiz, a leading cloud security platform, for $32 billion back in March 2025.
Big price tag.
It is. And they're not just buying, they're collaborating too. For instance, Motorola is bringing generative AI to new Razr family smartphones using Google Cloud's Vertex AI. So these strategic partnerships and acquisitions, they extend their reach and capabilities, really solidifying their market position.
Okay, so it sounds like an incredibly strong picture overall. But, as always, there are headwinds to consider, right?
Yeah.
What are the key investor attention points we need to be aware of here?
Yeah, definitely. While the outlook is largely positive, there are several factors that warrant investor attention. Probably the most significant is the impact of that increased capex we just discussed. While it signals confidence, this substantial investment will lead to accelerated depreciation,
Right?
which means they're recognizing the cost of their new massive infrastructure investments more quickly on the books, and that puts pressure on short-term reported profits. Depreciation alone grew 35% year over year in Q2 2025.
That's a significant increase in costs hitting the income statement. How is the company planning to offset that, or are they just absorbing it for now?
Well, they say they're focused on driving productivity and efficiency across the business to offset these costs. They anticipate healthy returns on these infrastructure investments over the long term, but short term, it's a hit. Another point is the tight cloud supply environment. Despite strong demand, the cloud segment expects to remain in a tight demand supply environment into 2026.
Meaning they can't build it fast enough?
Essentially, yeah. Demand for their cloud services is currently outstripping what they can immediately provide. And these capital investments take time to translate into available capacity, which could lead to, nonlinear growth in the short term. Growth might be a bit lumpy.
Got it. And what about their bread and butter, the advertising business? Are there any concerns there for the latter half of the year?
Yes, the advertising business is expected to face some headwinds in the second half of 2025. This is mainly due to challenging year-over-year comparisons. They're lapping strong financial services performance from 2024 and also significant U.S. election spending during that period, especially on YouTube.
Oh, the election cycle impact.
Yeah. Exactly. So while Q2 was strong, the back half of the year might see tougher comparables.
And for companies large as Alphabet, regulatory scrutiny is almost a constant background noise, isn't it?
It really is. The ongoing EU antitrust scrutiny regarding app uninstallation requirements presents a potential regulatory overhang. It's basically an unresolved issue that could lead to fines or operational restrictions down the line. We'll certainly be keeping an eye on that.
Okay.
And finally, there's the valuation nuance. I mean, while the latest quarterly results and forward guidance are overwhelmingly positive and they validate a bullish long-term thesis on Alphabet's AI leadership, the current share price, $192.73, is above our fair value estimate of $178.44.
So the market might have already priced in a lot of this good news.
It suggests that, yeah,
Correct.
much of the immediate upside from these strong results may already be reflected in the current trading price, something for investors to consider.
Okay, so with all these moving parts, what is the street saying? Let's quickly run through the bull and bear cases. What are the core arguments for those who are bullish on Alphabet right now?
Well, the bullish analysts, they point to several strong factors. They definitely highlight Alphabet's unparalleled AI leadership and innovation, particularly its full-stack AI approach, from research all the way to broad product integration, which is driving that increased user engagement and building that really strong moat. They also emphasize the robust Google Cloud growth and profitability, backed by that huge $106 billion backlog. That signals sustained demand for years to come.
And the diversity of their revenue streams must be a big appeal for the bulls too, right? Not just relying on one thing.
Absolutely. The dominant and diversified revenue streams from core Google search, YouTube advertising, and those rapidly growing subscription platforms provide a resilient financial foundation. And lastly, they see the strategic, aggressive capital investments in AI infrastructure as crucial. They view it as solidifying its competitive moat and driving sustained future growth, effectively future-proofing the company.
Okay. But there's always another side to the coin, especially with these massive tech companies. What are the counter arguments? What are the bearish analysts focused on?
Right. On the bearish side, that significant capital expenditure and its direct impact leading to accelerated depreciation is a primary concern. They worry it puts pressure on profitability and free cash flow, at least in the short to medium term. They also point to the cloud supply constraints, arguing that current demand outstripping immediate capacity could limit immediate market share gains or maybe delay revenue recognition.
And those advertising headwinds we just mentioned, I assume they're factoring those in too.
Precisely. The anticipated advertising business headwinds in the second half of 2025 due to those challenging year-over-year comparisons are definitely a concern for the bears. And of course, the current valuation concerns. They suggest the stock's trading price may already embed much of the positive news, implying limited immediate upside.
Right.
And finally, that ongoing regulatory scrutiny, particularly in the EU, remains a persistent overhang, introducing an element of unpredictable risk.
Okay, so summing this all up then, what we've seen in this deep dive into Alphabet, GOOG, is a company operating with, frankly, impressive strength, particularly in its core Google services and that booming Google Cloud segment. And both are significantly fueled by its unparalleled AI investments. It's a truly dynamic picture, isn't it?
It really is. I mean, while the company is making bold strategic bets on its future with these massive capital expenditures, those also come with expected short-term pressures, things like accelerated depreciation and the supply constraints we talked about. The long-term vision for AI's transformative power is clear and very ambitious.
But as you mentioned, the stock's current valuation versus its fair value is an important point for you, our listener, to consider.
Yeah.
Now, here's a final thought-provoking question for you to maybe chew on. Given Alphabet's massive investment in AI infrastructure and its expectation for these agentic AI experiences to be broadly used by 2026, how might this fundamental shift in human-computer interaction redefine traditional search? Or maybe even create entirely new types of queries and revenue streams that we can't fully conceptualize today?
Yeah, it's a fascinating question that goes beyond just the financial metrics, doesn't it? It hints at a profound societal and technological shift that could really reshape our digital lives in ways we're just starting to imagine.
Exactly. Well, if you found this deep dive insightful and you want more condensed, unbiased, and actionable knowledge from various sources like this, make sure to subscribe to the deep dive. And to ensure you never miss another one of our explorations, please be sure to hit that bell icon. Your support truly helps us continue to bring you these valuable insights.